most people work in their business. They sweep the floors, they service the customers, that kind of stuff. Smart people work on their business. They delegate, they create systems and things like that.
Welcome to the High Voltage Business Builders, a show where we interview entrepreneurs growing and scaling their income through e-commerce and showing you the path to make your first or next million. All right, folks, welcome to the call. Appreciate you joining me back here on the High Voltage Business Builders. I have a good guest today. I guess probably a great guest in terms of my opinion. We've been coordinating the activities of trying to make this happen for a while now because he's super busy, but I'm very honored that he's taking some time this morning with me to jump on. Roland, welcome to the call, sir.
Yeah, thanks for having me.
So we talk about a lot of things on this podcast. We've dumped topics from world to business to life to mindset to all kinds of activities. I know obviously you've been big in building businesses and scaling them and acquiring them and turning them over. And that may be the most interesting thing probably to talk about today is how you build up these companies or acquire new companies, turn them around and kind of teach people how to do this process. So while we get into that, let's unpack a little bit about who you are in terms of that topic too.
Sure. What can I tell you?
Well, give us some experience about how you're acquiring companies, because I know it's a big thing with you in terms of what I understand, and you can correct me if I'm wrong. Obviously, you've built some great companies, digital marketer, et cetera, have been some great and wonderful companies you've had some experience with, but you're showing people right now how to go out and acquire assets that are kind of depreciated in the market and then flipping them around for higher sale, if I'm not mistaken.
Well, actually, I think you can acquire anything. I like to acquire healthy businesses that are earning a profit more than ones that are in trouble because turnarounds, although I've done quite a few of them, it's a whole lot more work. So yeah, I mean, my background is I practiced law for about 13 years. I started out in real estate when I was 18, got my license, then insurance and securities at 19 and 20, put together a bunch of syndications, raised a lot of money, did a lot of developments of houses, especially single family housing, all up and down the East Coast, all the way down into the Caribbean. Then went on to open a law practice and did that. And throughout the whole time of doing all these things, I just was always fascinated in terms of acquisitions and divestiture. So buying and selling. And so starting with single family homes and then going into neighborhoods of homes. And then when I got my securities license, I was fortunate enough to be taken under the wing of an investment banker up in New York at Prudential Securities, who kind of taught me about leverage buyouts and how you can acquire businesses using the assets of the businesses to finance them. So basically, not coming out of pocket with any money. And just over the, 35, 40 years since I started doing that, I have really kind of, for me, found that there's a sweet spot in the, what we call the middle and lower middle market companies that are a couple $1,000,000 up to about 100, and that you can acquire those with very, very little, if any, money out of pocket. And so over the course of all these years, I've done about 1,000 acquisitions and divestitures. I help people do that. I teach people how to do that. And I just find it to be really, really fun because you can buy profitable businesses that are, 600,000 of them a year close. Just people just for whatever reason, usually, divorce, family, relocation, death, health, all those things that cause people to do it. They can't sell their businesses. And because 80% of the ones that get listed don't even sell. And they're not sure what to do. So the opportunity to come in and give them the ability to get something for their business, albeit over time, is very appealing to them. And so that's kind of what I've found to be a sweet spot of focus.
Okay, so there is a lot of things that we could dig into, and everything you just said, from the real estate side to your background to, of course, the business. Let's figure out which direction to go here. So since you most recently talked about businesses and 1,000 of them, how does it initially comes to my mind, how do you maintain, manage, or oversee 1,000 acquisitions in that time frame?
Yeah. So keep in mind, I don't have 1,000 companies in my portfolio. I've got 38 companies in my portfolio that are holding companies that are in different verticals. But the way that you do it is you basically become a deal person, and you think of, like, Michael Gerber wrote a great book called The E-Myth, right? And in that book, he says, most people work in their business. They sweep the floors, they service the customers, that kind of stuff. Smart people work on their business. They delegate, they create systems and things like that. To me, there's another level. The other level is that if you work above the business, then the business basically is something that you perceive to be your product or service. Like, it's not the products or services that the business sells. My product or service is the business itself. I'm trying to build value in these businesses so that I can sell them for several years of their profits, which is how businesses sell. So the way that you are able to do a lot of that is that you stay off the org chart. You don't have a job title, then that means you don't have a job and you've got operators for the businesses. And very often you'll even find that when you acquire a business, the entrepreneur that's in it is happy to stay there. They just don't like being an entrepreneur. They don't like having all that responsibility. And so there's a lot of ways to keep operators in businesses. And then, you can go everywhere from let's keep the people in there to let's find key employees that are in the business that were basically running it anyway, and then
Yeah.
give them the opportunity to have equity with you. To maybe there are consultants or advisors or independent contractors the business is using that can come in and run it. If that's not good, then you can go out to your network. If that's not good, you can acquire a competitor and then merge two businesses into one and keep one of the operators. You can even go out and get a recruiting firm to help you find the people you need. So operators, not a problem. The problem is when you are the operator.
Yeah, that is a big one. And that's one of the things we work on. And, to a degree, what we do on the Amazon side of building the brands and then taking them direct to consumer is obviously getting
Super
people in a
smart.
position from the very beginning all the way through the expectation of 24 months or exit, that they understand that they're not the only key operator in the business as they grow it up. If they cannot understand how to delegate or do the actual business component of it, they're going to set themselves up for a failure in the end. And obviously, you know that way better than I do. But it's definitely something that's important in all business, and most entrepreneurs don't get it. There are obviously, my experience, three things that fail in the business. I'm sure you can extol 20 of them, but knowledge, capitalization, and in some instances, having most recently consulted with some of these Amazon aggregators in the business market and acquisitions, it's overcapitalization without the right knowledge of how to apply it to the business, which
Yeah.
creates huge opportunities. Many of them are going to consolidate. What do you see in the market right now in terms of where it's going? Like with the acquisitions, has it changed much for you? Has the opportunities increased? Is it decreasing?
Yeah, the opportunities I think are only increasing. The cool thing is like where I'm looking for businesses that have been around for ideally 5 to 10 years or more, there's a lot of baby boomers that own those businesses. There's 50 million of them that'll be retiring over the next 10 years. There's 12 million of those that own businesses that are worth about $10 trillion in total value. So over the next decade, it will continue to be just a constant supply of businesses just from those people. But
Yeah.
then you've got all the people that are having challenges with maybe there's a better opportunity for them to earn more money someplace else. They've got a profitable business. They don't really know how to scale and grow it. And they're looking at the job market right now where just changing a job can get you 12% more than what you're making right now. And they're saying maybe the allocation of my resource of time isn't best spent in this business that I haven't been able to get to take off. So I'm going to go over here and get a great job that pays me a lot of money and put all this tough entrepreneurial stuff behind me. That's a huge category of people too. The prices across all industries for businesses, what they are selling at, has gone from a 3.8 last quarter to a 4.5 this
Yeah.
quarter. So that alone, for a professionally managed business, not for owner operated. Owner operated is still hanging around 2.5, but private equity values, what the
Yeah.
companies are willing to pay businesses that are typically 10 million in sales, 2 million in EBITDA or profit, that's gone up to over 15. And most of the companies that I'm talking to say they're paying between 10 and 20x on profits as they're acquiring now, most of the larger acquirers. So there's a huge opportunity, I think, because of the demand for businesses, the $5 trillion that's sitting on the sidelines in dry powder in private equity and family offices and SPACs and all those guys, to buy these owner operated businesses, professionalize them, put in management, make them appealing to a wider range of buyers, and then flip them out after you grow them or combine them with a couple to private equity at a significant multiple that's typically 8 times or more the value that you acquired. And that can be done over a relatively short period of time.
Yeah. And my experience as well, and I'm glad to hear you say that when you get above the 5 or 10 million, it's actually easier to sell those companies. They
Yeah,
have the upside
absolutely.
potential, operational independence. You're looking at the institutional capital. So there's a lot more, like you said, dry powder, a lot more money. It's a lot harder to sell the $1 million to $5 million businesses. And I think
And
that's
if you
where I've
think
seen a
about it,
lot of it.
yeah, if you think about it, it's just based on risk, right? Those smaller businesses are usually owner operated. And that means that if the owner were not there, then the business is going to fail at some point, like sales or marketing or ops or whatever. And so when they're professionally managed, the universe of buyers instantly opens up. But that universe of buyers doesn't want to spend a whole bunch of time because it's the same amount of effort roughly to due diligence a deal that's $1 million as it is for a deal that's 10 or 20 or 50. And so while they're dipping down lower, they're still not coming down into that market that you're talking about.
Well, they're not looking to buy a job, right? I'm not looking to buy a job. So when I see
Right.
a lot of those businesses, I see them as jobs, just other jobs. And you mentioned the baby boomers, and that's one of the biggest things I noticed is a lot of those folks have been working them for jobs for a long time. And there's the family doesn't want to get involved. Kids don't want to get involved. The upside
The
potential of
kids are going
selling
to be
it.
Instagram stars.
They're
They don't
Instagram
want to run a
stars, they're all
business.
doing YouTube, they're all on TikTok and Twitter or whatever, and
Yeah,
twerking out there in the world. But these folks don't understand. So a lot of them are shut downs. And I get that. There's a big opportunity to approach those folks and say, hey, you know what? We can kind of take that on. We sort of do that in the 1 to 5 million range right now, knowing there's an upside potential to flip it up to institutional capital because we have
absolutely.
the knowledge and ability to operate on scale. So if we bring people to the position of understanding the basic fundamentals of that and getting to a position where they could reach 1 to 5 million on their own as an operator, then we can step in and obviously help them sell it and then take operational control of it, which is
Mhm.
what others like. And there's where the SPACs and the whole aggregator thing came in. But with many of them, and I'm sure you've talked to a few too, they are capital heavy and knowledge light on the operational components of those types of models. Is that your experience as well? I see it.
Yeah, like the good, especially private equity, the good ones really bring operational skills. They found out about 10 years ago to 15, they really saw that that was like professionalization, making a company actually not dependent on the owners
Yeah.
and having really high quality management is important. So a lot of the, including us, private equity investors have their own teams that
Yep.
they'll bring in. Now, here's the challenge with like Thrasio and Perch and a lot of those guys is, they're idea is, well, we've got these brilliant MBA professional management people that have run giant companies,
Yep.
and they buy scrappy bootstrap companies that are maybe playing, with the Amazon algorithm for ranking or things like
Yep.
that. And so they think they're going to come in and improve these businesses, but the truth is they're not Street Fighter scrappy smart people. They're
No,
MBA finance type people. And so they
absolutely.
come into a company that's been a scrappy bootstrap and they aggregate them across things like Thrasio in particular, where it's like, yeah, it's just any Amazon FBA company. Well, there's not a lot of merger synergies in aggregating completely disparate companies
No,
that
there are not. No, there aren't.
yeah, right?
You, yep. Yeah, you can't save a business that's been bootstrapped on certain kinds of products. I've seen them buying like 2 to 3 SKUs, et cetera. And I look at these things and they're in mass market appeal. They're in saturation components. The one out of Canada that I was talking to the other day had bought a couple $1 million worth of properties. And I'm like, man, you spent the wrong money on the
Right.
wrong brand. Well, tell us
Right.
why. I had the whole exec team on the call, right? Tell us why. Surprisingly enough, they didn't call me back after that because I wasn't I wasn't extreme. The end result was, probably need to either get some serious operators in your business or just get back the 4 million left in capital you have and walk away from the deal and save some face. Because if you don't figure out what you've done wrong with why you purchased these two businesses, you're going to burn all your capital. We have more capital, they said, right? Oh gosh, like it's scary. They have more capital. Like, yeah, great. You're just going to burn it up. So how are you approaching obviously, you got a marketing engine, of course, and a network. I know you do. It's pretty deep. I'm
Mhm.
assuming you have a pretty easy ability, but if somebody wanted to get out and find these people, where's the fastest way for them to discover some of those folks who are sitting on that line saying, "Hey, sure, I'd like to sell this or I'd like to get, out of this or whatever," and there's good deals we have. Where do you find those?
I think the first thing is you have to figure out what you're looking for. So I'm
Yep.
really big on acquisition criteria. You need to know what it is that you want in terms of where does your skill set lie? Where is your experience? What are your superpowers? And then that will tell you what are the industries that I'm interested in and what can I solve for. And so I start like whenever we go in and we look at a candidate. And so I'll go a couple of ways. The way to find deals to get deal flow is to figure out what is your acquisition criteria so that you know what is the target you're looking for.
Yep.
Then the easiest place that I have found is to go to people that have already aggregated the attention and eyeballs of the people that you want to acquire. So that would be groups, LinkedIn, Meetup, Facebook. That would be, where they're aggregating, talking together. And masterminds are fantastic. Speaking at events, I find to be very helpful. Trade shows where they're all in one place and you can go around and talk to all of the vendors, not
Yep.
necessarily the attendees, but like if I'm looking for a MarTech company, a marketing technology company, I'm going to go to a marketing tech convention or
Right.
trade show, and there's going to be 300 exhibitors that are all marketing technology companies where I'll get to talk to quite a few of them. The big ones will just have people there that aren't really that great to network with or, do a deal with. But
Yeah.
then there's all these kind of smaller companies where very often one of the owners is there in the booth and you have the opportunity to go around and talk to a whole bunch of people. And then you're just finding out, hey, what's going on in your business? Looks like you're doing some cool stuff here. Yeah. And then you get into a conversation of what are the challenges that they're facing. And that generally leads to me, I find that just kind of leading with help. How can,
Mm,
oh, it's, yeah, we're having a hard time with this, one of the things I found works really well. And one of the companies that we've got is this. And they're like, oh, that's really interesting. If you'd like to talk about it, I know you're busy here, but we can hop on a call sometime in the future and talk about it. That giving to get, whether it's speaking or content on social or a blog or anything, that I find to be one of the best ways to generate deal flow. Then I say, okay, when we sit down and have the conversation, what's the problem that we're going to solve for? Do you need more leads? Do you need more infrastructure or people? Do you need a higher average AOV? Do you need more profitability? Do you need more innovation? Those can all be solved through acquisitions,
yeah.
which then I can offer to help with. And so that leads to typically a lot of opportunities to do deals. And the way I do it is basically I tell them, the way I start with is I don't want to ask you for equity in your company. I don't want to ask you to sell me your company. I'm happy to help beyond what we've talked about. If you'd like to go into a deep dive, let's do a half day consult. And then basically I have a 25K for 4 hours, half day consult that I do. And that either leaves them with at least 10x return on that investment during that time. Cause as you know, it's not that hard to add a lot of value when somebody's
Not
actually got a
usually.
business. And
Yeah.
then, but then very often they'll say, well, what would it take to have you come in and help? And
Yeah.
then that's the opportunity to do that. So that's what I've found to be most effective. And then, obviously referrals from people that you know.
Yeah, network, of course, is big. But so institutional capital, obviously, we know it's sitting out there large. There's a lot of cash flow sitting on the sidelines. How are you taking advantage of that through maybe relationships, networking, banking relationships to capitalize where you're not necessarily rolling your own cash into these kinds of deals?
Yeah, it's really funny. We've been talking a lot lately that we have assembled a fair amount of cash to be available to acquire, and we haven't been able to spend it because we end up more than often having those conversations with entrepreneurs, and then they're like, "Well, how do I get you to come into business?" And they just give you the equity. So that's kind of an interesting thing that we've
Interesting.
seen happening. But in terms of accessing capital, I mean, it's very, very easy. It's just having conversations with people and even cold outreach. One of the guys that I work with has raised 150 million in the last 9 months just by basically knocking on doors. So go to a deal book or Crunchbase and find out who are the private equity funds and the family
Yeah.
offices and SPACs that are interested in Amazon or whatever it is that you've got. And then it's pretty easy to reach out and see who the players are. Like HVAC, there's a lot
Mm.
of activity in the HVAC aggregation market right now for roll-ups. And so there are quite a few players. There's over 100 funds that are very specifically interested in acquiring HVAC companies. There's 105,000 HVAC companies in the United States. It's
Yeah.
pretty easy to see who those people are and then reach out to them if that's the play that you
Yeah.
want to make.
Well, and with a MarTech company coming in, it's probably, well, it's a lot easier to find usually those types of institutional businesses, like you're mentioning, don't have a lot of lead gen, a lot of pipeline, and a lot of flow, and the internet is not one of their major tools.
They're cold
Uh,
calling. That's how
they
they're
are
like they're
cold
just
calling.
basically cold calling,
Yeah, which is impressive that they've stayed afloat this long with a cold calling
right?
business or even just basic referral business. Those are institutional things. We have a gentleman coming in right now who's purchased a 30-year-old health and services company, a localized company that he's going to be taking online. The owner is walking out and he's purchased this company. And it's like, okay, we want to get him on Amazon. We want to get him out there. We want to get him in the marketing world. And it's going to
Mhm.
take that 30 years of book of business and start out into the marketing world. And I expect he will do really well
Very smart.
in the coming year. Yeah. We understand that institutional capitalized, home offices, et cetera. We had an opportunity to raise around 50 to 100 million in verbally confirmed funds in November of last year, but had to watch to see where the market was going with on our side of the house on the Amazon and aggregation space and said, nah, I don't think we want to push into that just yet while we watch to see what the market does. A lot of capitulation and consolidation have occurred, and now it appears that most of the acquisitions for those have stopped temporarily. It's the same experience are you seeing as that on that end of your, at least on the aggregator space, because I do know you touched it a little bit.
Yeah, I mean, most of what I find, I don't like institutional money because it's typically 2 and 20 type deals where they want a pref, they want an 18% internal rate of return, they want you to get your 20% after, and it's just not.
Yeah.
That's not rich
It
enough
started to
for
smell
me.
like a
What
job really fast. All of a sudden, I was like,
it
hey,
does,
I,
yeah.
I don't want to be in this job. That's not how this is supposed to work.
Right. Yeah. So we like private money much better. Private money is very excited to go from, earning a 1% return that they're
Yep.
getting and a lot of cash that they've got into something that's more in the 6 to 10 range. And so that's really when we're raising money where we typically find it's the easiest to do.
Yeah. And most of these things are coming up very ripe. There's a whole load and portfolio of, I know, of brands that are about to come on the market in the next 2, 3 months due to that consolidation and churn down. And so I'm kind of looking out here going, there's probably going to be some really great brands hidden in some of those institutional things that were totally being mismanaged. And literally, what I find is a lot of those brands, and you're saying some of the same thing, which is great to hear, but the knowledge component was enough to get them to where they are. They just, in most instances, they didn't understand what they did right. They don't understand what to do next. And most of them are very unfunded.
Yep.
Their literal brands are just missing the capitalization and expansion to take over market share, especially on platforms like Amazon, where growth is not too difficult to do when you know what to do the
Right.
right way with brands and raise those capital
A lot of
levels.
holes.
So there are a lot of holes and a lot of opportunities. Most people think in more scarcity mindset. Obviously, you think in an abundance mindset, and there's always more than enough opportunities than we can handle in a lifetime. So now it's prioritizing which ones to actually go after.
Yeah, exactly. I always like to say the deal of a lifetime comes along typically once a quarter.
With the quarter.
Once in a
Well,
lifetime deal comes along 3, 4 times a year.
3 or 4 times a year, that could be about right if there's enough pipeline, no doubt about it. There's always an opportunity. Can you buy this? Can you look at this? Can you check my business out? And they come across my desk quite often. More often than not, I'm like, nah, I probably wouldn't touch that. I'm not sure how you got into that, but that's not something you need to stay involved in business wise. So what's on your radar right now, Roland, as we're rolling through 2022, in mid of the year when we're recording this, what's on your radar for the next 6 months?
I mean, in terms of what to acquire or what?
Business, life, passion, pursuits, hobbies.
Yeah, my passion and hobby is really, I would do this stuff for free if I had to get another job to support me doing it because I just think it's so much fun. So it is truly a passion and hobby. Outside of that, I'm a musical person. So I play and compose. I performed out for years and years. I love photography and I love travel. I'm at 153 countries, I think it is right now. And
Oh,
so no,
wow.
158 countries right now. And so I'm trying to plug those holes, but COVID is getting in my way and crazy dictator type people and wars and things like that.
Oh,
But
there's all
other
that
than
kind of crap too going. Might slow you down in a few countries. You mentioned music. What kind of music are you passionate about? Like, what do you play? I didn't know this. This is cool.
yeah, well, I played keyboards and out in bands for years and years, and then you can't help but like I'd swap with the bass player when they had wireless bass on songs, so I could run around in the audience and do stuff like that, and then
Nice.
little bits of guitar and drums. You can't help but when you do it for that long, everybody ends up learning how to do a little bit of everything. But
Play a little all the pieces.
and
We
I've
may
done
have to have a
everything.
jam session.
Yeah, I've done everything from, being the token white guy in a 17-piece funk band to country
Nice.
to cocktail piano and rock. I tend to lean towards more electronic music these days just because there's so much that you can do
Yeah.
and it's easy and you don't have to practice with a whole bunch of other people.
You can make a one-man band nowadays. I've seen that happen quite a few.
Right, right.
Back jazz and classical was mine, and I went to school
Nice.
on a fuel ride music scholarship, playing trumpet.
Oh, cool. What
Yeah,
instrument?
so trumpet was my primary. I tried to dabble in piano and stuff like that, but it's not really my coordination. I'm very right brain, so right hand, right brain. It all coordinates
Nice.
very well with trumpet. But played for many, many years and through my college years as
Very
well.
cool.
So passion for music. We could have a jam session sometime. It'd be awesome.
I like it.
Yeah, it's always been a great component. It's something my kids do now. They're all into music, and obviously piano is a big component of our life right now as they all learn and find their way through that.
Oh,
It's a
that's
great
great.
way to create that brain and flexibility. For me, it was the creativity of the jazz that I love so much. Listening to Wynton Marsalis and Miles Davis and stuff growing up, and realizing that the music was just there. It was objective. I could go off the sheet. I could improvise. I could do whatever I want, and that became part of business. And it sounds like you found your way too, because business is just music to me. It's how you flow. It's how you live. It's how you the syncopation, the rhythm, the highs and the lows of the entrepreneurial world. I mean, it's all just flowing to me like music on a sheet.
Well, particularly, I think if you're into improv, then business is perfect because it is, you have the X notes in whatever scale that you're following to work with, and they can be
Yeah,
arranged in an infinite number of ways. And so if you've got
exactly.
some experience in that sort of creativity, then I think you can be less limited mentally so that you can
Yep.
see more options. So, from here, I can go up a third, down a fifth, whatever the things that that thought about to put together a lead line in music as an improvisation. To
Yep.
do that in business is much more natural because you've already done that. And so then it's just identifying, okay, well, what are the notes and what are the intervals and what are the different patterns that I might run in this particular business, which becomes a playbook. But a playbook can be very limiting because it, by
Well,
definition, is the way that you're supposed to do things.
scripted to a certain set. And it's like, okay,
Right.
I'll get to your certain set of script, but then we're going to go off key real fast.
Exactly.
And that
Exactly.
takes everybody and kind of screws with them. So people who
It
have been
does.
around me long enough recognize that suddenly, he's playing off in right field and there he goes jumping off a cliff again. And I know that I can feel the resonation with you on that because that's how we kind of do things. It makes people feel uncomfortable at
Hmm.
times because they don't understand the music.
It
And I
does.
understand your music, Roland, and I sure appreciate you coming on today and sharing some of that
Oh,
with me.
thanks for having me. I appreciate it.
If you like this episode, please share it with people you think will enjoy it as well. Thank you for listening, and be sure to tune in next week for a brand new episode of High Voltage Business Builders.